Hey traders, welcome to the Power Hour with me, Jamie Saettele. It is May 28th, 2021. Here, Friday before, or Friday heading into Memorial Day weekend, I should say, here in the U.S. And usually a big fun weekend, kind of the unofficial start to the summer. And it seems that markets have had a start to the summer. It's been awfully quiet, not just this week, but in recent weeks, you've seen volatility just die across a number of asset classes, except for everyone's favorite Bitcoin. So we will look at that, of course. That is an asset class that we've been on top of as far as calling the top recently. And I think I talked about it a little bit last week. Really not much has changed there, despite the big percentage changes in terms of, today, for example, but really trading in a range, Bitcoin, after that big drop that we had that began, I guess, 2 weekends ago or so. All right, so let's get into a few things on the dollar here generally. So an update this week, and I was looking at my typical, just let's go to Google News and type in US dollar and see what we get. And we got, the first one that came up was from the Financial Times about the dollar, the demise of the dollar, ? Reserve currencies in the era of going big. Okay, now a lot of the things in these articles, I don't have a whole lot of qualms with, or I don't necessarily disagree with. That's not the point. The point is the timing, right, of these articles coming out. Like, all the stuff in here is true, but from a near-term sentiment perspective, for example, like here's a daily chart. Okay, I can scroll. My mouse does not want to work. All right, here we go. Like, that article doesn't come out. Here we go. The article doesn't come out like over here, right? Negative dollar articles aren't going to suddenly appear as the dollar is rallying, and it's a good time to sell. And granted, these articles are talking about much bigger picture things. However, it's uncomfortable to publish things like that when the market is higher. It's just a human psychological trait. So instead, it comes out over here, right before a rally, right? And I think maybe before the beginning of a bigger rally, right? That's been my contention, or my view, really, is that everything since the start of 2021, which is right here, is a big, a big base to work higher from. So chart perspective, literally over the last couple of hours here, we did have a break above short-term trendline resistance in US dollar. And we've pulled back sharply. It's been a volatile end to, essentially the end to the month. Again, Monday is May 31st, but that is Memorial Day here in the US. So for all intents and purposes, it is the end of the month right here for at least in the US right now. So month-end trading, a bit volatile as it tends to be. But yeah, this is important. Short-term break above trendline resistance in US dollar. So if you're following US dollar, or this index in particular, I suggest paying attention to, again, this trend line here. We broke above it, and then looking towards about 11,780, or sorry, 11,770 or so. It's a swing high here from May 13th. You've also got the center line up there, which we've been following for quite some time, of course. That's the longer term structure. And you can see just in recent last few months, kind of the congestion resistance, etc. So once you get over that, we've got a bigger sustainable up move, in my opinion. Until then, it's really a holding pattern, as it has been for really most of May, and really a lot of the year. So that's that. All right, back to another headline. So this one, now granted, this is from Bitcoin Magazine. I am not familiar with Bitcoin Magazine. However, this has one of my favorite Crypto Boy says he's got a question here. And just keep questions coming, guys. I will get to them as I approach the subjects at hand. And I will look at this. I'll look at this question right here because I just brought this up. But yeah, this is another headline. Again, this is from Bitcoin Magazine. I've never heard of it. You know, whereas this one's from the Financial Times. Going to hold a little more weight in my book. But Bitcoin and the death of the U.S. dollar. Hey, first of all, death of the U.S. dollar, a little extreme. You know, when it comes to a headline, clickbait, I get it. Also, the image of a burning $100 bill. That's all you need to know. If that doesn't scream bearish sentiment extreme, I don't know what does. But let's take a look at Crypto Boy and his Bitcoin. All right, so Crypto Boy, here's what we've got. So let's see here. Okay, so here's a question. So first of all, thoughts about short-term future of Bitcoin, and then Jason Sebo says, I read your Bitcoin implosion analysis last week and asked, do you think the correction will continue after a recovery, or just price will continue to decrease? Well, we've had a recovery, Jason. Recall that we traded down to $30,000 in Bitcoin on May 19th. And we then had a recovery to 42,000, almost 43,000. And we've traded lower, and we've traded back up into 41,000 or so. So really, you're splitting hairs when it comes to that. I believe that what I believe doesn't really matter. I believe that we've hit support and bounced, and that the risk is lower. Again, nothing's changed in terms of Bitcoin in my analysis of Bitcoin from last week. And if you look at a weekly chart of it, you can see how nothing has changed. For example, we did the analysis last week when we were like here. This is this week. Look at the weekly candle. Nothing's happened, really. I mean, you know, in the context of this chart, like absolutely nothing has happened. So, yeah, we've already bounced. I don't know if we're going to bounce anymore. We could. I have no idea. It's impossible to try to call like little tiny moves here and there. But to me, Bitcoin has hit a ceiling. It made a top that really had been underway since February. It broke down just a couple weeks ago. Could say last week, potentially. And I think we're headed for, you know, 20,000 or so, which is the December 2017 high. Okay, let's move on, shall we? All right, so we've established the fact that you have an extreme sentiment, bearish, I should say, extreme sentiment towards the US dollar in a bearish manner. If you could see the book behind me, Sentiment in the Forex Market, I write all about that stuff in there. But yes, we've got an extreme bearish sentiment. When you have extreme bearish sentiment, the market, the suggestion, if you will, is that the market's at a near or at a price low, as markets in their psychological states tend to oscillate between optimism and sentimentism, and optimism and pessimism. And yeah, so if you're at a bearish extreme, you look to go higher. All right, so that's that. Let's move on. Got a little bit off track. If you got questions, keep them coming. Let's go to DXY. All right, so DXY, we tried to break higher here this morning. And of course, US markets open and it's all dollar upside. However, remain constructive on DXY here. So we had a break. We're not going, this is also highlights an important fact, I think, which is the daily closes are quite important. I know that FX markets don't, especially in recent times, you don't have significant ranges, you know, in the dollar, in FX in general. So, you know, it's tough to be patient. You want to front run, etc. But this highlights the importance of getting a daily close on the other side of your pivot. The pivot in this case is going to be this trend line, right? That trend line appeared broken, well broken, on, say, an hourly chart. It also appeared broken even on a 4-hour chart. But on a daily chart, it is not. What we have here, however, is a pretty clean 5-wave move higher. 1, 2, 3, dirty triangle 4, 5. So to me, I go into next week, you know, looking for, and this is great. You've got 618 retrace right in line with that former 4th wave low there, which would be yesterday's low, and that's going to be 89.88. So for DXY, let's look at 89.88 or so as you head, excuse me, as you head into next week. All right. Which brings us to Euro, and that should look more or less the exact opposite of DXY, and it does. All right, so if we scroll out a bit to that 4-hour chart, again, you gotta love, this is a great example of channel analysis, median line analysis for anything. This is, you know, again, euro dollar. This is a 4-hour chart, zoomed out, so we're going back to the March 2020 low. Look at that center line. Support, perfect in February. Little stop here in March. Once we broke below it, it was tank. And then really the last 2 weeks, it's been perfect resistance. So hourly chart, 1, 2, 3, 4, 5. And 618, 4th wave high. Excuse me, 122.15. So look for resistance around 122.15. We're currently 122. Again, market's essentially over for this week, and don't expect a ton to happen on Monday with Memorial Day here in the US. So looking at 122.15 more or less now for resistance in euro. So this is a great setup, in my opinion, given the sentiment that we just described towards the US dollar, which is extremely bearish as indicated by those headlines. And then looking for resistance here, right, to set up for a 3rd or C wave down in euro. And when we look at it in that manner, oops, here we go. All right. When we look at it in that manner, why is this not showing up? Hold on. That's okay. All right. So when we look at it in that manner, where, you know, where would we, if I, you know, putting on a short, say around 122.15 or so, if we were to get something like that, you know, where would I be targeting? So the first area that I'd look for on the downside is going to be 120.60 or so to 120.80. And the reason for that, so this right here is 120.60, okay? That's the May 13th low, series of lows down there around 12th, 13th. Yes, 12th and 13th and 14th. Also, when I bring up the futures chart, I've got volume weighted average price from the year-to-date low, which is in March, right? March 31st, I believe. And that is going to be 120.60. You've also got 20 21 volume weighted average price, which is just the volume weighted average price from the start of the year. And you can see that's the thick line on any of my charts. When you have a thick line like this, which goes between red and blue, that's volume weighted average price for the year. And you can see that actually is perfect support back there on May 13th as well. So those are the two levels I head into next week looking for, right? Essentially 122.15 resistance and 120.60.80 support. Okay. All right. All right, moving on. Let's take a look at cable. Crypto Boy asking, do you think it's going to fall lower this weekend with Monday also being a holiday? This weekend seems very scary for Bitcoin. I have no idea. Do I think it's going to fall lower this weekend? I don't know. I have no basis to make a decision on that. You're saying this does seem very scary. The weekend seems scary for Bitcoin. It may be. Again, I'm not sure what you're basing your assumptions or your views on. For me, just be more general. Are you bullish or are you bearish? Right? At this time, I'm bearish. However, noting that we've gotten into support with that crash last week, and we may very well range for a little bit longer before the market attempts to break down again. So you're asking questions that really can't be answered. As far as do I think it's going to fall lower this weekend with Monday being a holiday, that I don't know. Okay, here we are. Cable remains constructive. I wrote in a note this week that the only way to turn bearish on cable would have been for British pounds here so you see this very short-term channel. This is great in terms of getting points of reference. If we would have broken below this center line right here, you can see the thick line. First of all, this channels perfectly, but if we would have broken below the center line like so, actually I talked about this last week as well. If we'd have broken below it and then come back and then found resistance, then you can look to short targeting down here. But in order to get a much bigger move to the downside, you'd need to break down here. All right, so what happened was we found support here and bounced. Right, so you're still constructive on cable. That's really all there is to it. I don't have anything else to add in terms of British pounds. Okay, this is dollar Swedish krona, and what I want to show or describe a possible pattern that could be forming here, which would be extremely bullish. They are extremely rare, and it's called a compound fulcrum pattern. I'd never heard of this until, and I don't even know if I'm we have another question. What about GJ? I'm assuming GJ is pound yen. I'll get to that towards the end. All right, so I'd never heard of this pattern, like never read it in a textbook or anything like that. Until, I don't know, 10 years ago, maybe, I came across a blog post from famed trader Peter Brandt, and reading, I don't really think he knows me either, but reading his stuff through the years has taught me a lot, not just about, price analysis, but also about money management and psychology. notably. So anyway, a compound fulcrum is basically a head and shoulders top after a long decline. Okay, well, this is a long decline, and this is a head and shoulders top possibly in the making, right? Get it? So the trigger for a big reversal pattern is here and here. So you take out the right shoulder, okay? Then you look for a move up towards the top of the head, take that out. Then you're measuring is the width. So you'd like something like this. You'd be targeting up here. So again, this is still might not happen. This is again just a possible pattern. The pattern doesn't become a pattern until you trigger the pattern, right? And that trigger is up here. So at 8:50.66. Anyway, something to be aware of, and something I find interesting in the context again of the dollar sentiment, right? Okay. Let's go to dollar yen. Looky there, back to the trend line from 2018. This is an hourly chart. Here's a weekly chart. 2018, 2020, false break, right back to it. So yeah, big spot there. At this point, just pointing out that it is a huge level. Again, and I know I've been talking about this for quite some time as far as yen crosses are concerned. I really, really like the idea of lower yen crosses eventually. It's been, I mean, being honest here, right? We've been looking at this potentially since February. It's a lot like Bitcoin in terms of the construction of the possible topping formations. And Bitcoin finally did its thing. Yen crosses have yet to do it. I don't know if they will, but we'll look at those yen crosses here in just a minute. And we had a question from MZ Hansrohr 91 about pound yen, so I will get into that. In terms of dollar yen, know that you did hit that trend line from 2018, and your trigger on the downside is the line off of the lows here from late April, and then just this week on the 26th. So that's here. As always, I'll be in tune with the shorter term chart here. If we do get a clean 5 down and a recovery, then we'd be looking for maybe a short there. But other yen crosses, non-dollar yen crosses, are really my interest. MZ Hanser 91. So dollar yen worth looking for bearish next week. Yeah, maybe. I just kind of went through that. Again, if we get those conditions in place, then sure. Okay. Aussie. Trying to break down. And we have actually an important occurrence here when it comes to volume weighted average price stuff. So VWAP from the high, year-to-date high, VWAP from the year-to-date low in 2021 VWAP, guess what? They all are literally the exact same price. Okay, you can see here 77, 34, 37, all those levels right there. We finally broke it. We broke it this morning during Europe. Tanked. Now rebounding as the U.S. session got underway. So 77, 35, 40 or so. That should be resistance now for Aussie. At least that's where I'm looking. All right. So that's all you need to know for the Australian dollar right now. 77.30s resistance needs to hold there in order to, keep this, I guess, possible breakdown going or underway. All right. Dollar CAD, nothing to say. It's done jack all week. Really, the last 3 weeks is a tiny range. We've moved, 90 pips all week, so not much there. All right. Kiwi, I'll look at Kiwi real quick. Then I'll take a look at some of those yen crosses. Also, real quick, you've got, in terms of New Zealand dollar, we took out the highs here from earlier in the month yesterday. Aussie obviously didn't do that, not even close. That's something to look for, those non-confirmations or AKA divergences that you get in related markets, right? It's like Dow theory kind of, but for currencies. So like Aussie and Kiwi, one high, one goes to a high, one goes to a low. The other one doesn't confirm it. Kind of gives you a reversal warning or something's not right. Same thing with, used to be that way with kind of Euro and Swiss, but now I'd say it's more like Euro and DXY or even Euro and dollar SEK. You could look at it that way. Anyway, with New Zealand dollar, the trigger down here, the trend line, channel line, right, that goes back to late March, and call it 71.70. That's a key level right there. All right. Okay, let's get into some Aussie yen crosses. Yen crosses. Can't think. Okay, so chart from last week that I loved. Which again, I would pay close attention to, that 134.30 level in Euro yen. You can see the high here from 2014 to 2016. That 618 level is 134.30. 2 legs up from the 2020 low is 134.30. So 134.30, big. We're also riding along trend line resistance here, as you can see. I would call this a wedge of sorts. Let's see, sometimes we get, I explained this last week, but sometimes you get a kind of a thrust above the top of the wedge and a reversal below, right? We would call that a terminal thrust in Elliott parlance. So let's see if we can get that, and that would be a bearish trigger. Pound yen continues to march along higher. And at this point, the obvious level to take out is going to be the February 2018 high. If you get above that, watch for channel resistance, which is a little bit higher, about 157.30 or so. It looks to be about, 40 pips or so above this level, the 2018 high, of course. It's going to increase slightly each day. What's interesting as well, so if you trade above that 2018 high, guess what? Pound yen is going to be trading into the Brexit level, right? That was Brexit right there. Okay. June 23rd close is pre-Brexit level, and that is 157.66. Let's make that this thick line so we know where it is. So that is 157.66. That is a big level. Okay, that's where I'm looking. Aussie yen. Again, this is what I was saying about the yen crosses and being similar to Bitcoin in a way, because do you remember we talked about topping formations in Bitcoin and yen crosses, notably Aussie yen, since February? Well, here's February. here's now. We haven't gone anywhere. The level we've been trying to get, or that I've been following, is 86.40, and we wanted to get kind of a tag of that level and then see if we could reverse. We just haven't been able to do it. I've been waiting like half a year for it, it seems, but that's still the spot to look at. And again, you know, down here, let's call that low 83s. That's going to be a trigger for downside in Aussie yen. And that's all I've got for now. I just had a question on Kiwi CAD. I can't say I've really looked at that much, if ever. What I wanted to point out real fast before I go to that or look at Kiwi CAD is this is what I was talking about when I was talking about Bitcoin and yen crosses, notably Aussie yen. So here's Aussie yen. Let's put in Bitcoin and see what happens. Okay. Let's go log scale. Log scale. Okay. Here you go. So notably since the March 2020 low, right, at times pretty darn close, and really since I'd say the start of the year, they've been really, really close. So it's a technical term, really, really close. All right, here you go. Bitcoin in orange, Aussie yen in black. Pretty good, huh? So I don't know. The fact that Bitcoin starts to break down, I'm wondering if Aussie yen and yen crosses generally are going to attempt to do the same thing. All right. Okay, so Kiwi CAD was the question. Kiwi CAD. Let's see. Kiwi CAD. What do we have here? Seems to be in essentially the middle of nowhere for me, the way I look at it. I mean, let's see if there's a trend line here that we could have a look-see at. I mean, you've got, okay, so like this trend line, right? We've kind of been trying to hold that. So I guess, you know, and you've got these levels over here. You know, I guess you could kind of hold a constructive view against the low down here. What's that? 86 and change. Other than that, I just don't have much of a view on Kiwi CAD. I can safely say this is a cross that I have not paid much attention to over the years. Okay, that's all I've got for today. I did want to mention to you guys, please take a look towards the bottom of the screen. You'll see there's a Telegram channel, okay, that you can sign up for, and you should go check that out. So yeah, sign up on Telegram. And other than that, have a wonderful, wonderful weekend. And if you're in the US, of course, happy Memorial Day weekend to you. And enjoy the long weekend here in the US. And that is all. All right. So everyone have a great one. And I will talk to you next week. All right. Bye.